The market has come very, very far, very, very fast, and there's some risk, but things have improved markedly in terms of breadth, improved in terms of trend, all those type of things. We've had a lot of improvement. So here's what you need to know before the bell this morning. We're going to jump through a couple of the major markets, just kind of get an update on what's kind of happening, around all the different major markets. S&P yesterday, in particular, had, again, I've showed you this the last few days. We are very overbought on momentum, very overbought on relative strength. We are going to get a correction here. Now, that does not mean another 20% decline. But we are going to get a pullback here at some point that is going to reverse some of this overbought condition. Not only do we see this in the S&P, we also see it in the Nasdaq, which is obviously tech weighted, and the tech stocks have come back. Remember that whole the tech stocks are dead thing that we had earlier this year, and I told you to be careful of that? Yeah, well, they're back, and they're back in a big way. They've been driving this market higher. In fact, the Nasdaq is rapidly approaching. It's running into a bit of consolidation here, but again, it's very close to hitting back to its all-time highs as well. The whole Mag 7 trend is broken back above its negative trend line. So again, we've reversed all of this kind of negativity, and importantly, with the Nasdaq, more than anything else, you have actually started building what's called an inverse head and shoulders, which is, kind of also bullish here. This whole kind of negative trend that we had earlier this year has really started to reverse here to a large degree, and things are really starting to improve. But again, just like with the S&P, again, this market's very overbought, very extended, needs to have a pullback. On the flip side of this is small cap stocks, which continue to suck this year. So if you've been invested in small caps, it's been a tough road. Small caps had a very big decline. They have not had the recovery that large caps have. Again, as money flows come into markets, this is all about passive indexing. So when that $4.1 billion in equities was bought yesterday, a lot of that was ETFs, particularly like SPY, the leveraged Qs, the leveraged S&P. Well, that drives all the money into large caps. Small caps lagging here. Again, they are recovering a bit, but certainly not recovering as much as markets, but they also back to extreme overbought conditions here. We talked a little bit about the VIX yesterday. Again, VIX remains very, very suppressed. Really doesn't seem to be any concern here with the overall market in general about whether or not there should be, some type of correction. Investors are just piling back into this. Tariffs are resolved, and their view is simply this, is that tariffs are resolved, all the problems are resolved, everything's fine, we're back to the bull trend. That's the view of the market. That type of complacency is a bit worrisome. It doesn't mean the market, again, I want to be really clear, I'm not saying the markets are going to crash, I'm not saying that at all, but markets are very complacent here, so we're likely going to see a bit of a pullback here at some point, but you need a trigger for it. I thought yesterday for sure we would have a good trigger for that with the Moody's downgrade. That turned out not to be the case. Again, markets completely recovered that yesterday, wound up back in positive territory by the end of the day. But, the volatility index is starting to try to turn up on a buy signal here. So again, as a contrarian bit of indicator, when people are very, very bullish, you've got a lot of put hate out there. People don't want to own puts right now because there's no downside risk. You've got volatility very, very suppressed, getting ready to turn higher. Typically, that precedes a short-term correction. Again, right now, we have a lot of corporate buybacks in. That's helping support the markets in particular. We've got a lot of enthusiasm in the markets. That's helping support prices. Some of that fuel is going to run out as we get into June. So again, June is probably the potential where we're going to get a bit of a pullback in the markets. So save a little bit of dry powder here. Don't be too aggressive. Have a little bit of dry powder. Take some profits, rebalance some risk, as we talk about often. And I think probably sometime in June, you'll get a bit better opportunity to allocate more to equities at a little bit better prices, kind of relieve some of this overbought condition in the markets currently. So that's what you need to know before the bell this morning. Patience being the key word.